Hello, it's Greg Britton, your Spokane mortgage strategist. It is Monday the 16th. Quick look here at Greg's home update, the video version. I look back at last week's housing, mortgage, bond, mortgage rate market, and I look forward to this week. Well, last week it was pretty steady as far as where we ended the week versus where we started. And same thing, a lot of fear over Greece, and they're threatening to leave the European Union, which they're already having a lot of problems with default on their debt, and that would surely mean huge problems if they left and didn't have that support anymore. So that is keeping bond buyers interested in U.S. mortgage bonds, which keeps mortgage rates low. 30-year fixed rate still depending on the loan product, but middle to 4.5, 4.75 range. So still some of the best rates we've seen in a long, long time, and great opportunity if you're looking to buy, refinance, or even sell, because lower rates are the bigger pool of qualified buyers you have as a seller. So low rates are good for all that. We'll look forward to this week now. Like every week, a lot of economic reports that have the ability to move the mortgage bond market. One that really could be the kicker this week would be the release of the Fed meeting minutes, and we'll see what kind of language is in those minutes when that comes out on Wednesday. And if there's stronger inflationary concerns, we could see mortgage bonds lose some value and mortgage rates go up. If they still see a very, very tame inflation and things are at bay, that probably would be the expected news. So probably nothing would really change mortgage rate wise. They'll stay pretty low like they are now. So we'll see what happens with that. One thing I thought was interesting this morning, a report came out that should have been very good for mortgage bonds. It was a manufacturing report. It was way off the target. It was half of what they thought it would be, which should have been good for mortgage rates, good for mortgage bonds, but yet it went just the opposite, and it went like a lead balloon. In minutes, it just tanked the bond market. And what's that about? So you dig into that report and find out that the cost of raw materials for producing goods was recorded at their second highest, I believe it was the second highest levels ever since that report started coming out, which is very inflationary and not good for bonds. And but so you have this drop on that news, and then it stayed low for a few minutes or a half hour, and then they went right back to where they were. So at the end of the day, the bond was almost unchanged. So it's just kind of funny, the volatility and how the knee-jerk reaction to bond buyers, and in an instant they'll go one direction and then they'll kind of get level-headed and go, oh wait a minute, that's not that bad after all, and it'll come right back to where it was. So keeps things interesting around here. So that's it for this week, and we will see you next Monday. Have a great week.